The stock market got destroyed today as investors are selling off a ton of stocks right ahead of a very influential week in the market. We have the FOMC meeting on Wednesday. Yields are rising and everyone's panicking. In this video, we're going to talk about what's happening in the market right now, the most important things to know, and just what to be aware of in this crazy time. So, Tom, what's going on?
Yeah, the SPY is tanking off. And like you said, Mike, yields were really going insane today. You can see the TNX was actually up 6.65% here. This is just the index. It doesn't really represent the yields themselves, but it does give a good representation on how high they're starting to fly up here. And Mike, that SPY had some very bad price action. We actually gapped down this morning and then kept falling below 385 all throughout the trading day. We tried to break back above 380, but then got rejected and fell even lower, hitting 373.30 here at the end of the day. We just saw continuous push towards lows today, and especially towards the end, Mike. I noticed a lot of big tech stocks like Apple, Microsoft, Tesla even, and a few more were making new daily lows too. So it was a very brutal day. I even saw some stocks like ChargePoint were down like 16%. One of our favorites, DraftKings, was down 15%. Even some of the China stocks like BABA that were popping up last week are back below $100 and we're down 10%. So it was a crazy day in the market. I cannot believe how much red actually came in today.
Exactly. So in my opinion, there's two main reasons as to why the stock market fell so much today. The first one would be more of a continuation from the bloodbath that we saw on Thursday and Friday, and basically the really bad inflation data that we got on Friday. One, like when you have a major sell-off, not only does it cause stocks to fall down, of course, but it encourages short selling, and then people who are already holding stocks, when they see them getting destroyed, honestly, a lot of people end up selling out of fear. So I think that is one of the reasons. And the other main reason we saw the stock market fall so much today was because of how treasury yields and rates overall are increasing. When you have rates rising like this, especially treasuries, it makes the current valuations of stocks fall down. So basically, when you have rates rising like that, it just puts a lot of pressure on almost all stocks in the market. And these rates are rising at just a very crazy pace right ahead of that FOMC event that we have on Wednesday.
Yeah, exactly. And one big thing that happened today was we actually saw the 2-year and the 10-year treasury yields actually invert today. You can see here on the chart, this is pretty much showing the spreads between both of those yields. It dipped below zero there, showing that they inverted there very early in the morning momentarily. Now they did end up coming back up, but you can see they did end up inverting. A lot of traders really monitor this very closely. They see this as an indicator of recession. They say this in this article, but Mike, we've heard about these two yields inverting for a while now. And, you know, it's pretty big to see this happening. Apparently this did happen back in April as well. But either way, it's a bad sign for the economy. Like I said, that is a pretty big sign for inflation. And we're getting pretty close, Mike. If that next GDP report comes in negative, it's definitely not going to be good for us. But yeah, those yields were really rising up today. Like I said earlier in the morning, Mike, TNX was just gapping up and flying up all throughout the day, up 6.65%. I think this definitely attributed the market down. But like you said, that snowball effect is probably also attributing a lot. And I feel really bad, Mike, because I feel like a lot of traders, you know, we've been having a lot of like slight fake outs. If we look at the SPY on a max daily chart, for a while there, for a couple of weeks, we were going straight back to the upside there, but we just got rejected. And now we're making new lows, unfortunately. So it sucks to see, but the SPY, Mike, it looks like we're approaching some pretty big supports here, maybe around 370 next. And then below that, I'm seeing another one, maybe around like 365, then 360. So we're going to have some big levels on the way down, but I'm curious to see where the SPY ends up evening out at.
Exactly. And Tom, can you zoom in a little bit on the implied volatility of the SPY, like over the past couple days? That little blue line all the way at the bottom of Tom's screen represents what market makers are expecting in terms of volatility for the market overall. So when you see that rising, that's basically the market makers saying, hey, you know, the stock market's going crazy right now, but we're expecting it to be even more crazy in the future. So I thought that was interesting, and we really are set for a wild week. So Tom, let's talk a little bit more about the event that we have this week. I'm sure we do have some people that are not fully aware of what we have going on.
Yeah, so we have those FOMC meetings going on Tuesday and Wednesday, but we don't actually get any information from those meetings until Wednesday. So they're going to have that federal interest rate decision come out at 2 p.m. Eastern time there. And then Powell's going to speak 30 minutes after that at 2:30 p.m. Eastern time at the press conference. And he always has some pretty good words to say. And then he usually answers some questions after he's done speaking. So that's going to be very crucial to watch the press conference. But that interest rate decision at 2 p.m. Eastern time is also going to be very, very important. As we know, Mike, this is what everybody's been talking about lately. This has to do with the federal funds rate. And you can see that they have a pretty good expected range on this one here, Mike. I'm looking at the rate of it right now. Looks like as of June 9th, we were at 0.83%. Now they're expecting the Feds to raise this by another 50 basis points here. Now, I will say that there was some pretty big talks today that came out that said that there was an article by the Wall Street Journal saying that you could see a larger than expected 0.75% basis point increase. But just keep in mind that all these analysts and stuff, they've been saying that the Feds might have a bigger increase than expected every single time. But so far, the Feds usually come in at the expectations. But who knows, with inflation going rampant, I guess they could end up doing anything.
Yeah, so just to be clear, so as of yesterday, the market was pricing in a 0.5% increase in the federal funds rate. Now the market is pricing in a 71.6% chance of there being a 0.5% increase in the federal funds rate. So that's the expectation heading into Wednesday. So rates will probably continue to rise. It's just a matter of how much the Federal Reserve depends to hike the federal funds rate by. So keep that in mind. Another thing I just want to say really quickly is let us know what stocks you're watching in the comments down below. We're doing a new thing on the channel where we're trying to get to as many comments as possible. So if you guys want us to cover any specific setups, let us know in the comments down below and we'll try to take a look at them. But Tom, I also saw like Bitcoin was just getting clobbered today. So what's the news with that?
Yeah, it was terrible. You can see Mara was down, Coinbase was down. Of course, Bitcoin itself was down too. I'll go to my trading view chart of Bitcoin here. Mike, there was a huge support on Bitcoin right around $29,000 to $30,000. And we are now exploding below that down to 23,000, almost, pretty much like $23,600 right now. It does keep jumping all over the place because it is very volatile as we speak here. But yeah, Bitcoin is falling down in a big way. You can even see on the daily chart, Mike, the technicals have been lining up very well. Like we double topped up there. Now we're flying through support. Now we're in this kind of big sell-off mode. It seems like there's a pretty big support down there around 20,000. I'm curious to see how we'll react as Bitcoin starts to fall. I didn't really see any major news come out today. Sometimes in the past, we've seen Bitcoin fall on news of more regulations surrounding it with China or with our federal government or, with anything. But, today it just seemed like increased selling pressure with the rest of these growth stocks. It seemed like every growth stock today, Mike, was down anywhere from like 5 to 15%. So just to see Bitcoin fall off, 10 to 11% isn't too worrying to me. But obviously, it's not a good thing to see. And yeah, we're definitely on that big downtrend. Like I said, though, 20K seems like a pretty big support there.
Yep. All righty. So let's get right into these comments from the previous video. With the first comment, we have Tim saying, just buy ZIM stock for the big dividend. So while ZIM does pay a big dividend, some important things to keep in mind while trading or investing into dividend stocks is that they can stop paying their dividend at any time. So be a little bit careful solely investing into a company based on their dividend. Another thing that I've noticed with this one is that they are in like the shipping industry, you can say, and that industry has done fairly well over the past couple of years. And if we do go into a recession and if, demand for a lot of products, goes down significantly, the shipping industry can take a really big hit. So just keep that in mind. Dividend stocks are great sometimes, but if they stop paying their dividend, that can really, really hurt.
Yeah, it can. And, we've seen stocks do that actually over the past few years. Like, look at Ford here. You can see on Ford's chart, they were paying a dividend year over year and it was going great. Well, I shouldn't say going great for them, but, they were holding up pretty steadily. You can see they actually had to quit paying a dividend because they started having so many fundamental issues there. And it did hurt their stock for a while. But thank God they brought the dividend back, Mike. But that does go to show you that you can see some pretty bad downtrends ahead of those announcements and stuff like that. I know there's been a few other companies during COVID that had to do that also. So yeah, it's definitely crazy, but Zim is a pretty crazy stock, Mike. Whenever you go back and you look at their history, I was really surprised to see them have this $17 dividend there. And I was actually so surprised to read this article. They paid back 50% of their 2021 net income on that dividend, Mike. That was just insane to see.
Yeah. All right, with the next comment, we have Ryan saying, since I'm a long-term investor, I love these dips in the market. So many great companies at a discount. Yeah, there we go. Investing in stocks for the long term is definitely the way to go, especially when we see giant dips like we're seeing now. So even if you don't catch the bottom, as long as you're dollar cost averaging, or as long as you don't plan on selling anytime soon, a lot of times when everyone else is panicking, that could be an amazing opportunity.
Yeah, it definitely can. And if you're acquiring shares, you can always sell some covered calls and, you can sell some puts to get those shares if you want to take a bit of a safer route at it. But yeah, Mike, it's definitely a good time to still average in. And, we all like, for example, I have Square pulled up here on the chart. They're making new yearly lows here, but hey, I'll take it. Like they're at a really good discount right now and they might keep going down for the next couple months. But I will say, I expect a lot of these companies to end up evening out eventually, at some point. With the Feds raising rates and stuff, the inflation and stuff will have to slow down. And, with such big dips going on, eventually stuff will start to get bought back up. I did notice today, Mike, like Facebook, or now Meta, was down quite a bit, down 6.44%. They're starting to get pretty enticing on the chart. And they actually have earnings coming up in July, believe it or not. So that's going to be interesting. But yeah, we have a lot of stocks at great levels. And I know we always talk about DraftKings and they're getting pretty low too.
Yep. All righty. Well, Tom, let's get right into these momentum plays for tomorrow. With the first one, we have NEO to the downside.
Yeah, poor NEO down 11.85%. Go ahead and make them break below 1584. But man, that was a brutal day.
All right. With the next one, we have Run also to the downside.
Yeah, with Run, go ahead and make them break below $22. That's a nice even level.
And with the last one, we have AMD also to the downside.
Yeah, AMD fell back below 100 and they've been kind of exploding down here. Go ahead and make them break below 86.50.
All right, so we are watching AMD, Run, and NEO for potential day trades to the downside tomorrow, only if they break below the levels Tom listed. And then I also want to give a giant shout out to our member of the day, Nas0102. He's been in the chat for a couple months now, and I saw that he's been increasing his activity lately. So huge shout out to Naz0102. Thanks for being a great member of the chat. But Tom, what do we have on the earnings schedule for this week?
Yeah, so like we talked about yesterday, there's nothing too crazy going on here, but tonight we do have actually Oracle reporting tonight, so definitely keep that on the radar. Always be on the lookout for that conference call, and be on the lookout for that pre-market action tomorrow too. I'm sure it will be pretty awesome with them. But later in the week on Thursday, before open, we have Kroger or KR. That's going to be pretty big with all these companies like Walmart and Costco going crazy with their earnings lately. And then we have Adobe after close Thursday, ADBE. I think that'll be a pretty interesting tech stock reporting. But nonetheless, with the market down this week, that'll probably overshadow all these stocks going down at least.
All right, there we go. And then, Tom, do you have any favorite setups heading into tomorrow, or any final thoughts?
Yeah, a lot of stocks were down today. It seems like a lot of these hedging plays, Mike, like UVXY, VXX, stocks like that are starting to really pop up. I don't really want to talk about VXX too much because they've had a few issues over the past couple of months, but UVXY has really been popping up, Mike. It was up 20% today as the market was turning around. Now, I know this one is a little bit overextended in the short term, but if we do keep seeing the SPY sell off, some of these hedging plays, guys, might go pretty well, like UVXY or SPXS or stocks like that. Sometimes those can do well. even if you see stocks like, for example, like oil falling off, you can always play things like drip then. Drip is a stock that goes up like whenever oil falls off. You can see today, crude oil at market open dipped down and then exploded. So sometimes you can get some pretty good gains, especially off those commodities lately.
All right, there we go. Guys, check out that first link in the description in the comments down below to trade with Tom and myself every single day. You'll also get access to our custom bots and a bunch of other great things that you won't find anywhere else. Check out that first link in the description and the comments down below. You can cancel at any time, and we have a coupon running. But thank you guys so much for watching, and let's have a great week and be prepared for more volatility.